Good evening, traders. It's Mark here from the day trading room. The time is 10 to 10 London time on Friday, the 7th of January 2011. And it was non-farm payrolls pre-market today. So, very busy day and some good action on the market. Um, Welcome back, new year. I've done a couple of blog posts on my blog, thedaytradingroom.com, and one of them was the first trade back on the new year. Good to always start on a good trade. And the second post a few days ago was how I'm going to adjust my trading plan for 2011. And the sort of summary of that really is to tweak what I'm doing now on the Dow, on the YM, and in particular trying to hold for the longer move. Looking back on my trades 2010, very good entries, not so good exits. I take my first scale, which it is prudent, and it's something that it's a strategy that I've used for a while and it works for me. I take a second scale and then look for final targets, and actually that second scale is limiting my potential profit. So what I've decided to do is try not to scale for the second time. Just look for the two scales, one for one at the first scale, which is normally plus 10 or 12 ticks on the Dow, depending on the volatility at the time, and then take the final lot off at the target. I'm leaving a lot on the table with the interim scales that are probably unnecessary. So we're going to try that. That's one of the things I'm going to try this year to try and increase my return in 2011. And I'm also going to add another couple of markets. I've noticed last year that, especially towards the end of the year, I was only trading perhaps 2 or 3 trades per day, and that's all you need. That's absolutely fine. But there is opportunity in other markets. Now, in 2008, I traded a lot of oil alongside the Dow, and had a great year with that. So I'm going to start to look at some other markets as well, and I'm not going to allow them to interfere with the Dow, because the Dow is my bread and butter. It's my it's the market I prefer. It's the market I'm comfortable with. So this is always going to be my primary market. But in the spare time, if I'm not after I've analysed the Dow, and if I've got time left, I'm going to start to look at the oil market, and I'm also going to look at some of the stocks that are in the news and then behave more like an index. I only expect maybe one of those trades per week for the time being, and oil maybe 1 or 2 trades per week. But I just want to start to get a feel for some other markets. I feel I'm quite blinkered with the Dow, which is great. You need to focus to get a feel for it. But I'd like a bit more exposure to other markets, so I'm going to do that. And the final thing is I'm going to start having a look at the DAX in the morning. I'm in London time here, so 8 o'clock in the morning, FTSE opens, DAX cash opens. So if there's an opening drive trade in the first couple of hours, then great. I'm going to have a go at that. So there's some few more things there. I expect not to be doing all of that in a few months. This is just a bit of an experiment to see whether I can add a couple more markets, and in theory increase my profits for 2011. Try the little tweaks on the Dow, my Dow stuff, pretty much going okay, apart from just like to squeeze a little bit more out of those markets. So toyed with increasing my size, doubling my size, or even increasing it by 50%. I normally increase it at a regular basis, but this time I'm going to just try have a look at other markets and just to see if I can spread the risk, and also it will hopefully smooth out the equity curve a bit. The days when there's not much happening and you're just grinding it out, are days when there's perhaps an explosive move in oil or in 1 or 2 particular stocks. So that's my focus for 2011. As I say, I've written about a piece about it on the blog. I will probably, as I get into focus and get into tune with those new markets, I will probably start to talk about them. So, but anyway, let's talk about today's Dow trades. Pretty busy day, very active. Didn't have time to do look at any other markets. Plenty of action going on here, and that's going to be the theme really. If there's plenty of action on the Dow, I won't be looking elsewhere. But if it's quiet, then I will see if there is any other opportunity elsewhere. So let's get down to it. Non-farm payrolls came out 1:30 London time. And here else is the overnight chart. and you can see we had a big spike lower, consolidated then around that 11,630 level, and pushed up for the open. So that was the theme really that we were looking at going to the open. The open then pushed higher. It just tagged the overnight high. The overnight high was 11,673. That swing went to 11,675. Failed pretty much immediately and came lower. Came straight back through the open and through the gap, even though there wasn't much of a gap anyway, through the close, and then started to push lower. Then we got a tiny bit of consolidation. This was my first trade of the day. This was a long. The reason I took the long here was because of the overnight consolidation after that non-farm payroll data, and also during the earlier hours of the morning, it had been consolidating in that region. So the push down around the 3 o'clock level, 3 p.m. level, should I say, matched up with that congestion, so it was a reasonable place to take along. Only looking for a move back to the 50%, as often is the case for me in the early trade. I'm looking for a push back up to that open level, which happened to be around the 50% of the move. As you can see, there's 25%, there's the 50% there. Let's get my drawing tool out. Yeah, there's the 50% there, and I'm just looking for that, and that was just below the open. So took my half off there. That was my first scale, so let that run a little bit longer than 10 points, to just a little bit more, and held on to the rest, looking to see potentially if that was just a shakeout and we're going to drive up towards yesterday's high, previous day's high. The reason I had that premise is purely because of the overnight trade. The non-farm payrolls that were there when we came out, the fact that we consolidated and then pushed back up into that region, and then attempted again. Maybe think there were some buyers around, so there was potential for the little shakeout before the push higher. So closed half there, pushed up. Happens to coincide as well with the high ticks. That's one of the things I really look for. I prefer plus 1,000, but if it's a higher day, that's what the dot denotes. Then that's a good cue for me to get out. And you're gonna have to sit through a little bit of a cycle before you get another push. If you get another push, it pushed a little bit higher. There was the push higher there. The pause, push lower, looking then for that to really explode, because that's really the first pullback after this move. Not a very strong move, but could start to pick up a bit of momentum there, especially the tick started to pull back. So holding on to half the position, got the push, just failed, and that's not interesting me there. If it's failing and rolling over, I'm all out. So all out, about the same sort of price. So that was the first trade of the day for me. Second trade, we pushed through that low. We pushed down to this 11,621 level. Now, why would I go long there? Well, let's have a look back. Let's bring the 3 minute over. This is the biggest level in yesterday. Amazing level, and it has been for quite a while. You can see how many times it bounced off it yesterday. 11,621, 11,620, around the 11,620 is 25 level. So put it wherever you like. We had the first bounce there, the second, the third, fourth, fifth, sixth. Plenty of bounces. Couldn't really break through. That was just on the momentum behind it. Got to 11,615. So it's a key level. Has been for a few days, but it really got cemented yesterday as a key level, as it did on Tuesday. But I'm just being a bit cautious about the earlier weeks stuff, because not a lot of players, traders and big money managers were around, so just a little bit cautious. But as you can see yesterday, great level, tagged it. So that was well and truly marked on my chart for today, and it just set up quite nicely really. Pushed down to it, just paused, started to pop back up. You could just see on the tape where it just a few guys stepped in, just started to lift it back up, and it just looked like a lovely little trade. Took the long there. It was about the 27, a little bit late. Just wanted to make sure, and obviously the tape bars just pushed up a few ticks away from that entry. But we got in there on that candle there, pushed up. I was looking really for a move. Perhaps even this I was looking perhaps this could potentially be a double bottom here. The little fake out down to that good support level, a fake out, and then another look up there. So that was my longer term, if you like, within the day premise. I was probably going to take a scale at the 50%, just above that VWAP. That was the sort of target. Didn't get it. We didn't get it. It pushed up, started to roll back over, retested that level again, held, which encouraged me. Push back up, but then when it just failed to even take out highs there, it just started congesting and holding near this 21 level. I got a little bit concerned with it, and closed the trade. And that was actually a couple of tick loss, that trade, which was disappointing because it's such a good level. But never mind, that didn't work out. We've got the push lower through it, tested that 11615 level, which really was a bit of a token level. The 20 was the more of the key level. The 15 happened to be the low print of yesterday, but not as relevant. Not as relevant, should I say? Anyway, we've got that little pause, little bear flag. Missed that one. Missed that short. Really, that was a gift. Push lower, it held. You could see there was no buyers were pulling this back up. This should have got the interest of a lot of buyers because it was below that key level, but it just didn't. So that really should have been a really good aggressive short, but it didn't get on that. But those who did were rewarded nicely as it pushed lower. Gave some nice low tick readings for your first scale, first pullback, and run it if necessary. So, however people wanted to play that, as I say, missed that one. Was then looking, of course, for the longer term cycle to get short, and this was the first sort of counter trend move, if you like. It wasn't that aggressive, but it pushed back up and then it just paused, and it's in my little window of quarter to 12 to quarter past 12 New York time. That's a nice little favourite of mine. Looking for a change in direction, either that or a flush lower. It happened to be the change in direction here, so took a small short here. Didn't get too wild on it because the stop was going to have to be pretty large because of that 11620 above it. Rolled over, there was the low. Took off half at that low, which was still a pretty decent scale. And where was my second exit? I think my second exit actually was on this low tick reading here. I haven't marked it on the chart, but I'm pretty sure I came out. This was the low tick reading, got the -1,000, and I was all out there and missed this further lower move, which was a little bit disappointing. But it was a good catch nevertheless. Running out of time a bit here. This was an absolute beauty of a trade, really. Came down and took the long there. Now, why would I take the long there? You might ask. Yeah, okay. Let's bring in some more charts and we can see. There's our Dow cash. As we know, that's really what we're trading. We're trading the future, so we've got to be really looking at that to see what's going on. And this happened to be 11,600 Dow cash right there. Came down, tagged it, just went a smidgen below it. Let me just undo that. I think you can see that better now. Yeah, 11,600 cash. Just went a smidgen below it. You can see how key it has been, and we know what they like with the whole numbers on the cash. We like to trade those, so there was no reason not to have a go at that level. I just waited until I saw a bit of strength. The volume, the important thing of this is the volume was there as we started to drive back up. So push lower, tagged that level, and the volume came straight in to push it straight back up. So it was worth a go for me. Took the long there and stayed with it for quite a while. Well, for me, we got the push up. We got the push up to that level before, which was that low. I just held on to it because I just thought maybe there's a lot of force behind this. This could, really explode. Didn't happen. Rolled over, and unfortunately, just got the low. I took the exit on the low swing of that, but it was a great trade nevertheless. Got a good chunk of that move, so that was great. And very quickly, 1 minute left to go through the last two trades of the day. This I was looking for the deeper cycle, push back up to this cluster of resistance there around the midday level. I thought we'd had a good run there and we might roll over and retest around there, perhaps the low, as the market was weak on the day. So there was my short there. We rolled over slightly. It didn't work. I was getting a little bit panicky about it. Not panicky as such. I was a little bit concerned about it. I didn't think it was right because this had a lot of strength, and the market was showing a little bit more strength than earlier. So it could have been a V bottom type day. So I scratched that out for hardly anything. Very last trade of the day. 30 seconds left. Let's quickly get this done. And here we were hanging around this 11,620 level for so long. Just saw the congestion. We pushed up, pause, pulled back, and we're just holding here. This was literally a tape scalp. Saw the tape guy there was holding. Came in with a bit of volume. They pushed it up. I went long. Closed most of it on the break. Held the last batch until the close and didn't get much more out of it. So that was the day. Great day. Lots of good opportunities. Have a good weekend. I'll be back with a video next week.